This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Avril Hong in Singapore. Your top stories this hour. Asian stocks prime for a pullback as Wall Street's rally stalls amid concern about stretched valuations. The yen in focus, with Japan's incoming leader denying she wants further currency weakness. Bloomberg learns the U.S. is considering national security restrictions on China-linked router maker TP-Link, sending rival shares higher. Also ahead, President Trump planning to visit the Middle East for the handover of Gaza hostages, expected early next week. And we speak exclusively with New Zealand Finance Minister Nicola Willis about the growth outlook for a fragile economy.
All right, we've just opened for trade here in Australia. Let's take a look at how we're doing in the early going. A little bit of softness following on from the weakness we saw in the US. The broader index off by about 1/5% at the moment. We've got BHP as well, the world's biggest miner, off by 1.25% right now. Bloomberg reporting today that this dispute with China over iron ore prices could potentially drag into 2026. So that's weighing on BHP shares right now. If we take a look at the Japanese yen, meanwhile, that is continuing to soften, 153 at the moment. We did hear from the new Prime Minister, Sanae Takaichi, saying she has no intention of triggering an excessively weak yen. Those were in comments to local media in Japan. Did see a brief strengthening there for the currency, but it did later give up gains. We've got the US dollar, meanwhile, at a 10-week high. Also got the Kiwi dollar there, pretty much unchanged, 57.47. And we did hear from the New Zealand Finance Minister, Nicola Willis. We'll bring you that interview a little bit later on. The New Zealand government looking to sell its debt stake in the telecom infrastructure business Chorus. Willis saying a lot of New Zealanders probably didn't even know that the government had that stake. Avril.
Yeah, Paul, take a look at how we finished overnight on Wall Street, right? It's about this monster rally that we've been seeing since April, getting a check, this breather, amid the concerns about whether we're in an AI bubble. And given how far we've come on the stock rally, any bit of negative information is making that rally really susceptible. I mean, we saw from Microsoft, right? It's forecasting this continued data center crunch. Now, on top of that, we also saw gold prices pulling back from their highs along with silver. Part of this to do with what we saw in the Gaza peace deal. On top of that, this is, of course, a commodity that has been overbought. So perhaps unsurprising to see some of that pullback. On top of that, we also saw the slide in oil prices, given the peace plan, that potential for rollout, of course, and a general risk off. So let's talk more about the latest developments in the Middle East, because we have in the past hour or so heard from the Israeli government, and that's getting that approval of the Gaza hostage deal. This is, of course, according to the Prime Minister's office. In the meantime, the U.S. president says he'll travel to Israel as Hamas agrees to end the war. Have a listen.
Peace in the Middle East. We secured the release of all of the remaining hostages, and they should be released on Monday or Tuesday. Getting them is a complicated process. I'd rather not tell you what they have to do to get them. There are places you don't want to be, but we are getting the hostages back on Tuesday, Monday or Tuesday, and that'll be a day of joy. I'm going to try and make a trip over. We're going to try and get over there.
Yes, so certainly very encouraging. A lot of exhaustion, a lot of devastation, but that now appears to be coming to an end. But still a lot of hurdles in the way as well. I mean, we do have to wait and see for the Israeli Defense Forces to retreat to a buffer zone, and that would clear the way for Hamas to potentially disarm. But both of those things are somewhat interdependent, but for now, at least, very encouraging. And Hamas says it's going to open the Rafah crossing as well into Gaza to allow for the entry of aid. So relief finally on the way, Avril.
Yeah, the supply of food and medicine, crucial supplies for people in Gaza. Now, Bloomberg's executive editor for Asia markets, Paul Dobson, joins us now on a day where, of course, we see that focus also on markets in terms of that AI rally, the concerns about a bubble. what are you seeing in the markets?
Yeah, morning, Avril. So the bubble speculation or the bubble kind of concerns have been building in recent weeks because we've been seeing that continuing move higher in all of the AI and technology-related stocks. And, you know, just this continuing cycle of every time there's a headline, some tie-up, some agreement to spend more money, the market loves it and jumps another 5%, 10%, you know, for individual stocks, takes the index up to, you know, all-time highs. And people are talking about, as the valuation stretch, you know, is this too much? Is this too far too fast? When's the correction coming? You know, we haven't seen a very big drawdown for quite a long time now. Valuation is not a very good reason to time the market, and there's a lot of excitement and euphoria about the prospects and the opportunities out there. But at the same time, kind of those concerns are still there. Now, you know, in our story today, you know, we're talking about, gosh, people are really sort of, you know, kind of stressing out about this. The drop in this S&P was only 0.3%, right? So it's not exactly a huge pullback or anything like that. And people are there. There's dip buyers all the time. I'm going to rename it. Instead of buy the dip, we should be calling it buy the chip, because every time we have that little bit of a drop, up comes the market again. So more good news and another headline and another reason to push higher. So, you know, people don't really love it when they can see that this is, you know, going very rapidly. But at the same time, people don't want to miss out. And so that's continuing to pull people off the sidelines again whenever there's an opportunity.
Paul, I want you to talk to us about what we're seeing happening with the yen as well. I mentioned a bit earlier that Japan's new Prime Minister, Sanae Takaichi, says you know, she doesn't want excessive yen weakness, and that saw brief strengthening before the slide resumed. So how much more downside is there for the yen? What's the threshold for intervention, and would that even work?
Yeah, hi, Paul. Well, intervention is only ever going to slow the move. It's not going to be able to stop it completely. And the Japanese government may decide at some point that it wants to slow the decline if the pace gets too far too fast. You know, they have those rules about if it's moving 10 yen in a couple of weeks or, you know, several percent over a period of a month or thereabouts, then they think that that's too fast, right? And so they may step in and they may organize for banks to kind of buy the yen in order to prop it up. We're not there yet. I think 155 plus, we may start to get some louder warnings from the government based on those metrics that they use to sort of explain the currency moves. 156, 156.50, then perhaps the alarm bells start to ring a little bit louder. But Takaichi said the right things here, right? She said, one, she's not pushing for a weaker yen, and she also said, you know, they referred in the questions to previous comments she's made about whether the BOJ should be hiking or not, and she kind of tried to laugh it off and said, you know, why do you keep asking me about this? I know that I'm not able to comment on what the BOJ does. And that's quite important. When we had Ishba coming in as the last Prime Minister, I think he made a misstep in the first few weeks, kind of commenting on what the BOJ should be up to, and the market didn't like that at all. So this is a much kind of more thought out line, at least from Takaichi. Now, the BOJ, though, of course, how independent is it? How is it going to calibrate that move? Will it be confident enough to move now? Is it going to push it back a hike until December? If the BOJ does hike, that would presumably trigger quite a big rally, or at least if they signal that their intention to continue to move rates higher at the steady pace that we're seeing, may reassure currency investors. And the yen, I think, is not under pressure necessarily as a rejection of Japan, but more the idea that if interest rates stay lower for longer, then why not sell the yen and put your money back in something with a higher yield instead?
Amid all this, we're also seeing this dollar debasement trade. Maybe some of that retrace, given how a gauge of dollar strength is at the highest in 2 months.
Yeah.
But we've also seen that attention, I mean, consistently shifting into gold, also seeing a pullback along with silver. Where do things go from here?
Well, I think that the debasement trade isn't just about the dollar anymore. I think it's just as much about Japan, and it's just as much about Europe. And people don't see any, the people that like gold and like Bitcoin and have been buying it already kind of see this as a real endorsement of the idea that those are safer assets than floating currencies, where the governments and the central banks are taking steps that weaken those currencies over time, that erode their purchasing power. If you're running inflation hot or above mandate for a sustained period of time, then you're able to buy less with your pound or your dollar or your yen than you were before. And if you keep it in gold, where, you know, the price is accumulating relatively relative to currencies, that's going to sustain its purchasing power better. And so that's what that sort of push into alternative assets that we're describing now as the debasement trade is really all about. So comparing the dollar or the yen against each other doesn't really tell the whole story. We should be thinking about it in terms of how are they doing against precious metals. And yeah, we had a pullback yesterday, but we have seen one storming rally in those markets this year so far.
Paul, on the topic of weakening currencies, let's go to Exhibit A, the Argentine peso at the moment. And, we've seen the United States offering $20 billion in financing to Argentina and a move to stabilize the peso as well. But what are the risks here? Because Argentina's got a bit of form in this respect, doesn't it?
It absolutely does. And that's exactly, I think, what they're trying to sort of stem here. Because Argentina has needed so many bailouts so many times, the U.S. administration seems to think that the policies that Milei is putting in place, given enough time, should work. And so propping him up and propping his policies up and propping his government up now, longer term, will pay off by reducing that risk, by helping to get the country in order. But, kind of crucially, as a part of that, if their markets collapse with midterm elections coming up, then that would play very disfavourably for Milei. So maybe, having that little extra support now in order to get him through those elections could pay off longer term. That's the sort of gamble it seems maybe that the US is willing to take at this moment. But I think that there's another element as well, which is all about political influence in Latin America, right? At the moment, there's a lot of tension between those that are leaning more towards China and those that are leaning more towards the US, and the Trump administration seems to favour Milei as a person that they can rely on, and so another reason for them to be backing, supporting and propping up the Argentine peso and the Argentine government.
Just as an aside, gold priced in pesos, 5,621,000 an ounce. So there's some trivia for you for Friday. Bloomberg's Paul Dobson there. Still to come, we're going to speak to CSIS Middle East Program Senior Advisor and former U.S. Ambassador to Saudi Arabia, Michael Ratney, going to be joining us to discuss the latest developments in the Middle East as Israel and Hamas move forward with President Trump's peace plan. Bloomberg has learned that the Trump administration is weighing restrictions on TP-Link, a major router manufacturer with ties to China. Sources say the move follows an investigation into whether devices widely used in American homes and businesses could be vulnerable to Chinese state-sponsored hacking. Well, let's bring in Asia Tech reporter now, Annabelle Drulers. So, Belle, a lot of households have these devices, not just in the US, but elsewhere in the world. What are the concerns here?
Well, the concern here really is national security concerns, and these have been levelled at the company for quite a while. But as you said, TP-Link is one of the most popular router choices in the US. I think there was some reporting from Wall Street Journal at the end of last year that they had a 65% market share capping off 2024. So it is a company, too, that was founded in China nearly 3 decades ago, and they have been trying to address these national security concerns. So some of the steps we've seen them take, and a major one was actually splitting into a US entity and a China-based entity over the course of last year as well. So, yes, these national security concerns have been really coming from both sides of Congress. Lawmakers have persistently raised concerns that its wireless equipment could be exploited by Chinese hackers, following what has been as well a series of attacks on its routers. We're now hearing from sources that the Trump administration could actually be looking at ways to restrict the business, given those concerns, even though we should also state they haven't been proven. There's no concrete evidence suggesting that TP-Link's wireless equipment can indeed be compromised by China, but it could be done by issuing a so-called initial determination that TP-Link is a national security threat. And this is an assessment we understand has been actually ready for quite a period now, but it does seem like there's a new urgency that we're hearing from our sources for them to move it forward. On the US side, it is interesting as well because yesterday, for instance, you saw China ratcheting up tensions around rare earths, and we are looking ahead to this important meeting between Presidents Trump and Xi. But TP-Link, if they do move ahead at the Trump administration with its initial determination, they can certainly respond to it. But ultimately here, Washington could be looking at laying the groundwork for TP-Link to have its US operations restricted or even outright banned.
You talk about the interesting timing. At the same time, we're also hearing how China is blacklisting a researcher that exposed Huawei's chip secrets.
Yes, so this is a Canada-based organisation called Tech Insights, and it specialises in tearing down electronic products to really reveal their inner workings. And we should also state Tech Insights is an organisation that Bloomberg's worked with many times, and we regularly do publish their information, including on their findings on China-made products like what we get from Huawei, for instance. So Tech Insights has been very pivotal in our understanding of Huawei's technological progress, but also the challenges it faces as well. You could say maybe this work hasn't been so well received in China, and so the company's now been added to the unreliable entity list. It means that Tech Insights is going to be barred from doing business with organizations or individuals in China, alongside a raft of other companies that include some drone providers, and that was according to a statement we got from the Ministry of Commerce on Thursday.
Well, we've also had some encouraging news from TSMC reporting a 30% increase in third quarter sales. We're going to get third quarter results next week. What sort of impact might we see here and on the outlook?
Yeah, strong results really from TSMC. So yeah, to your point, we got the monthly sales figures yesterday. So the quirk of Taiwan is that they put out these monthly sales figures, or the exchange, and then when you put those together, so we got yesterday September, you can add that to August, July figures. It gives you those calculations that you can then understand what did it look like for the third quarter. And as you said, it was a strong jump, around a 30% increase in third quarter sales. According to our calculations, revenue for the period was $32.5 billion. Or just under 990 billion Taiwanese dollars. That was ahead of analysts. What they're looking for is 962.8. So we're looking for a beat when we get those earnings on the 16th of October. It is important because even though we didn't actually see any sort of real market reaction in TSMC, well, we actually saw it moving lower, but that sort of did follow the NASDAQ as well. On Wall Street, it is important because what's really being the persistent concern we've been having over the past few weeks as well is the circular nature of a lot of these deals that are going on with NVIDIA investing into OpenAI and OpenAI also making investment in AMD, that it's that circular nature. But this does at least alleviate perhaps some of those concerns that we're looking at a gigantic bubble, because TSMC is, of course, an indicator of real demand for its hardware.
Belle, thank you so much. Bloomberg Tech reporter Annabelle Drollers for us there. Turning to another top corporate story we're tracking, court documents show a joint venture between Japan's Norinchukin Bank and trading house Mitsui faces $1.75 billion of exposure to bankrupt auto parts supplier First Brands. Irene Garcia Perez leads our coverage of U.S. distressed debt and bankruptcy, and she joins us now with more on this. So what do we know, Irene? It seems like this fallout is spreading.
It is definitely spreading, and what we know is that this claim so far is the largest that we have seen disclosed in the bankruptcy case, and there is going to be a fight between the trade financing providers of this company, because there's a chance that the company was offering the same collateral, the same receivables to different creditors.
Irene, what else are we seeing in the way in which firms are looking to mitigate the fallout? One thing that they will be trying to do is claim that they had ownership or right over that collateral. In this case, in the case of this joint venture, the receivables. And in the case of, say, for instance, Jefferies, which we reported yesterday, they are also invested through a hedge fund, through their hedge fund arm. In their case, they have a similar facility. It was also reportables. In other cases, it's not so much about mitigating, but it's having an impact in
For instance, UBS is facing a renegotiation of the terms of their sale of O'Connor to Cantor, because O'Connor is also exposed to this bankruptcy, and so Cantor is looking to renegotiate the terms of the transaction on the back of this.
It's interesting also because in terms of this focus that is drawing on the private markets, this comes after years of, how recently it's been hit by different cases. What does this tell us about perhaps the murky world of financing in such a manner?
I think First Brands is mostly an example of what happens when markets are frothy and investors are basically looking for yield, because this is a company that there's little that is known about the owner, and when creditors were asking due diligence questions, they were turned down, or they were faced with an angry reaction from management. The financials are very complicated and difficult to understand, because the company kept making acquisitions and adjusting earnings in a way that it was very, very difficult to make the numbers work. And still, a number of investors invested in this company. So I think it's more a sign of what happens when markets are frothy and investors don't ask as many questions as they should be asking.
Irene, thank you so much for providing that context. Bloomberg's Irene Garcia Perez in New York. We'll have more ahead on the Asia trade. This is Bloomberg.
Let's get the latest now from the corporate front. Amazon is rolling out an updated version of its main artificial intelligence tool for business. It says Quick Suite is a chatbot and set of AI agents that can analyze sales data, produce reports, or summarize web content. It's the company's latest effort to grab a slice of the market for software designed to automate and speed up office work. Ferrari shares plunged the most since listing in 2016 after it issued cautious forecasts. The Italian car maker sees adjusted earnings rising to $4.2 billion by 2030, but that's a slower growth rate than previously offered. Ferrari's also scaled back its electric vehicle plans, even as it unveiled elements of its first EV, the Electrica, which is set to debut next year. And the gloom is worsening for Germany's auto industry, with Porsche now joining BMW and Mercedes-Benz and reporting weaker sales in China. Porsche's revenue there fell 21% during the third quarter, dragging global shipments down by almost 6%. German Chancellor Friedrich Merz has now announced $3.5 billion in new EV aid for the industry, while saying he'll push back against EU plans to effectively ban new combustion engine cars by 2035. Avril.
Yeah, Paul, among the companies also in focus, take a look at some of these tech names and how they're faring after hours. Of course, we saw Microsoft under pressure in the session following forecasts which show that data center crunch. Of course, this is something that has been a recurring issue for cloud providers in recent years. That it sees this persisting into 2026. So questions swirling about what this could potentially mean for its Azure growth engine. Will it be able to meet some of this demand? Now, aside from that, also keeping tabs on Intel. This is, of course, a company that now has U.S. backing, and it has unveiled debut new technology, really a make or break moment for the U.S. tech firm as it launches its comeback. So we're seeing flat in after hours on both those stocks. We'll have more ahead on the Asia trade. This is Bloomberg.
Let's take a look at how WTI is tracking. We're off about 1.5% since the announcement of that ceasefire between Israel and Hamas. Crude right now priced at $61.60. For more on the progress of that peace plan, let's get to our next guest. Michael Ratney is CSIS Middle East Program Senior Advisor, also a former U.S. ambassador to Saudi Arabia. Michael, thanks so much for joining us today. I just want to start, if I can, with the early stages of the ceasefire. After the hostage release, hopefully early next week, and Israel pulls back troops, hopefully also. What's next? The plan is for Hamas to disarm. There are a lot of hopefullys in the sentence at the moment.
Yeah, thanks for having me on the program. So keep in mind, this is phase one, and we haven't actually executed phase one yet, although it's been agreed to. If we get as far as the hostages being released and the bombing stopped, that's a big deal. And that's a remarkable thing, obviously, for both Israelis and for Gazans. Everything else is in later phases. And from my perspective, it really depends on two big things. One is whether the Israelis perceive that Hamas is actually disarming, as the 20-point plan requires, and whether Hamas perceives that Israel is actually withdrawing its troops from Gaza, as the plan requires. I think it's entirely possible that either misperceptions, misunderstandings, or outright ill will could result in either of those two parties not moving ahead. If one perceives the other isn't fulfilling their obligations, then I think all bets potentially are off.
Yeah, I can think of no other conflict in the world that has the power to endure more than this one, and it's synonymous with an ongoing cycle of reprisals. So going forward, if there is success in the early stages, how enduring do you feel any peace between Israel and the Palestinian authorities could be?
Yeah, it's been fragile essentially forever. And after the ill will engendered by this conflict on both sides, I think it will remain highly fragile. So I think the factor is going to be, is there international support, not just from the United States, but from Europe, from the Arab world, from elsewhere, that can come in, start to bolster whoever ends up governing in Gaza, whoever ends up providing security in Gaza, such that the Gazan people feel a substantial increase in their quality of life, and the Israelis feel secure. If there's enough support internationally for that, and you can get some traction, humanitarian aid, eventually reconstruction, then I think it has a fighting chance of actually getting a hold.
You talk about some of these Arab states among those that are behind the scenes that have been helping to facilitate, to actually get us to this stage. What are you seeing? Because some of them have also been the ones that have been pushing for this two-state solution. How much pressure do you think they might be exerting?
So I think all of the Arab countries are pushing for a two-state solution, and I think all of them are saying essentially the same thing, which is if you want Arab official financial support for reconstruction in Gaza, then the plan has to be more than simply a ceasefire. It has to be somehow tied to a political horizon for the Palestinians, and including for the people of Gaza. I do think Arab countries, including those that have been heavily involved in mediation, like the Qataris and the Egyptians, as well as others like the Saudis, the Emiratis, throughout the region, I think at this point they are just relieved that the talks have gone as far as they have, that we're really within striking distance of an actual ceasefire and an end to the conflict. But I think for them to get more heavily involved, they're going to need more substantial progress on the political front, not simply a ceasefire.
Michael, I also wonder who is in charge here of determining whether the terms of the ceasefire is being upheld.
So if you look at the terms of that 20-point plan, it really places a remarkable degree of discretion in the Israelis. They determine whether or not progress has been achieved such that they would withdraw their troops further. I think for many, including many of the Gazans, they would regard that as something of a loophole, because ultimately the Israelis, including Netanyahu, as recently as his meeting in the Oval Office with President Trump, made clear just after that meeting that they really have no intention of completely withdrawing their forces from Gaza. And so I think it's worrisome, because if Hamas kind of discerns that the Israelis aren't actually going to follow through on subsequent phases of the plan, I think it reduces their incentive to follow through on their obligations.
So what's the role for Hamas going forward, and not just Hamas? What's the future hold for Benjamin Netanyahu as well? Is there a place for either groups of leaders in the future for Israel-Palestine?
So two obviously very different political processes. I think for Hamas, it's the U.S. perspective, it's the Israeli perspective, it's really the regional perspective that Hamas should have no role whatsoever in Gaza, no military role and no governing role. As recently as the statement issued by the group of Arab and Muslim foreign ministers, they actually publicly recognized the need for Hamas to disarm and Hamas to give up any role in governing Gaza. That would be a major step forward, I think, from my perspective and from the perspective of almost everybody in the region itself. For Israel, Netanyahu's future is going to be determined by their democratic processes. At this point, there's supposed to be an election in about a year, sometime next fall. He has a government that's obviously dominated by extreme right-wing forces, and that's one of the reasons why this war has gone on for so long. But despite the fact that his government has these elements in it that are extremely unpopular in Israel, it remains a fairly stable government. Those elements, the far right wing, will complain about this deal, but I'm not sure they have a strong incentive to bolt and bring the government down.
Do you think then there can be a bit of shrugging off of the cost of war for Israel that amid these past couple of years have also been seeing the economic costs and credit ratings downgrades?
I think the Israeli business community and the Israeli public, honestly, would just love to get back to a normal life. If you remember the time before the Gaza war started, before October 7th, Israel was in a pretty good place. They were talking with us about possibly normalizing relations with Saudi Arabia, expanding their integration into the Middle East. We, the United States, were talking about integrating Israel, the Gulf, Saudi Arabia, and the Emirates with India and Asia in a way that would have economic benefits really globally. It was a particularly optimistic moment. And I have to say, if I were an Israeli, I would just want to get past this war, get past the trauma of this war, and get back to the dynamics that were really in place just a couple of years ago.
Let's hope this deal holds and we see more headway towards peace. Michael, great to get your insights. Thank you so much. Michael Ratney is former U.S. ambassador to Saudi Arabia and CSIS Middle East Program Senior Advisor. We'll have more ahead on the Asia trade. This is Bloomberg. South Korean markets set to reopen within the hour after being closed for most of the week due to national holidays. And of course, this is off focus because we have been seeing already the AI play coming back into focus for much of this week. In terms of some of the chip names, specifically Samsung, GDRs, we're seeing how they have been outpacing ETFs. So is this a sort of signal for the markets as we watch the reopening? Let's bring in Asia equities reporter Sang-Mi Cha. So, Sang-Mi, what are traders saying about the reopening?
Yeah, it's been quite a while, and just taking us back to just a week ago was when Sam Altman was in Seoul shaking hands with SK Hynix as Samsung chiefs, with President Lee Jae-myung, and just signing the deal, the supply deal for his Stargate project. And that led to SK Hynix's stock to 20 years high, and for Samsung, 4 years high. And so we're looking at it closely, of course, these chip stocks. We're already seeing the numbers in the pre-market, which is up 5% for each of the stocks. And so this is actually just a bullish sentiment that we're seeing. Traders are telling me that there's that positive catch-up to play that has played out, the AI frenzy that we have seen. And there was this meme in the morning for Korean retailers that they were actually passing around and saying there's this door, and they were knocking on the door and saying, please open the door, open the market for Korea so that they can trade. So there's that optimism going, definitely. And Morgan Stanley analysts handing out the bullish price target target upgrade for Samsung and SK Hynix, saying that the super cycle is coming and the memory pricing is getting more attractive. And so obviously more upside from here on out.
So what are some of the other catalysts for Korean stocks going forward?
So especially speaking for Korean equities, Kospi is really at the highest we have seen. It's among the best equity indexes in the world this year. It's going towards that 50% gains, trouncing back from all these bad years that it has seen. And so a lot of them are saying, a lot of the traders are saying that the valuation is still compellingly cheap. We're seeing about 11 times forward earnings. That's far below the SPX's 23 times, which is it's been trading at right now. So some of the catalysts, of course, are, again, that whole AI CAPEX theme that is playing out, and, of course, the APEC summit that's coming up at the end of October.
All right, Bloomberg Asia equities reporter Sang-Mi Cha there. Let's take a look at how New Zealand assets are performing at the moment. We've got the Kiwi dollar a little changed against the greenback. It's also stabilising against the Aussie, that pair 114.12. And Bloomberg analysis this morning suggesting, well, that decline against the Aussie might be looking a bit stretched now, with a lot of the Reserve Bank of New Zealand's pricing already in. The broader NZX index off about 2/3%, and keeping an eye in particular on shares of Chorus, which is a telecommunications infrastructure business, unchanged at the moment. The New Zealand Finance Minister, Nicola Willis, saying this morning that the government's looking at selling debts in that business to raise revenue. Well, the Finance Minister also says she expects the country to return to growth in the third quarter with further acceleration in 2026. We spoke exclusively to Nicola Willis and asked her why the economy's been so fragile with a bigger than expected contraction in the second quarter.
Look, we know with the seasonal variation since COVID that those numbers have been jumping up around, and there could be some correction to that figure at a later update, particularly given some of the technical factors in that measure. But we were expecting a negative second quarter, and what we saw is after 6 months of strong growth and recovery prior to that, including a 0.9% positive rate in the first quarter of the year, that on the 1st of April, when the Trump tariff announcement occurred, that really knocked confidence out of a lot of New Zealand businesses and investors who looked at that global uncertainty, and for a global trading nation, really worried about where that would go. We're now in a much more settled environment. We know what New Zealand's tariffs are, and we've watched our exporters adjust very quickly to that new reality, and many of the worst side scenarios that had been predicted haven't occurred, and so we're confidently predicting that growth will have returned in the third quarter and should accelerate in the fourth quarter, particularly helped along with an official cash rate that continues to fall.
Yeah, I do want to, you mentioned business confidence there, and the latest business confidence report showed firms planning to reduce investment. How much of a concern is that for you?
Well, we've worked as a government in this year's budget to provide more impetus for business investment through the investment boost tax policy, which offers a 20% write-down on asset investments against tax bills. And that's directly intended to be a tax incentive to encourage investment. And firms have certainly said that that is something that will make some business cases stack up that wouldn't otherwise. And as we look ahead with a lower official cash rate, with inflation now having stabilised back in band, and a government that is ultimately pro-business, reforming, deregulating, we believe that's creating the conditions in which businesses will feel more confidence over the coming months.
All right, so you're expressing some optimism, but of course we had the RBNZ, the Reserve Bank, cutting rates by 50 basis points last week, saying it's open also to further reductions. Does that suggest to you the central bank doesn't share your optimism, that it's worried the economy won't recover?
Well, I think that was the Reserve Bank doing its job of reacting to data in the second quarter that, as you pointed out, was much more negative than had been forecast, and quite different from what they had forecast and what had informed their earlier monetary policy path. So the bank is reacting accordingly, and of course with that lower official cash rate, that in itself will be an inject for the economy, and that's, in my mind, monetary policy doing its job as as a government, we're working alongside the Reserve Bank by ensuring that our fiscal settings give them that room to move on interest rates, by ensuring that we're not overstimulating the economy and that we have a path of fiscal consolidation. And so, look, the Reserve Bank itself is continuing to forecast that there was growth in that third quarter, and they agree with our Treasury assessment that growth will forecast over the coming months, getting back up to very healthy levels next year.
Well, Treasury will deliver you another forecast in December in its half-year update. So what are you expecting in terms of that forecast? Do you think it could be cut? And what would that mean for tax revenue?
Well, look, so far, actually, tax revenue is holding up. We released our 1 year in review financial statements yesterday, and they demonstrated that the tax take was actually up on what Treasury had forecast at the budget that it would be. In fact, all of the indicators in that update essentially were a little better than we were predicting. Our core fiscal measures that the government is targeting around net debt actually stayed steady. When we look at the deficit, that was smaller than we were expecting, and spending as a proportion of GDP was also smaller. We're on target to reduce that over time. So at this juncture, Treasury's updates in terms of the real data rather than the forecast data are, as I say, running positively relative to forecast.
Obviously, the longer-term goal here is to get the budget back into surplus. Can that be achieved by 2028? And if not, when do you think it could be achieved?
Well, that remains our fiscal goal, and we do think that will be achieved. In our latest budget, we were getting to surplus out a year beyond when we would like to. We've kept that goal of doing it a year earlier, and in order to achieve that, we're following a path of fiscal consolidation. We've had very low operating allowances. That's the discretionary spending that the Crown does, very low relative to where they have been historically, and we've supported that with a savings program that so far has delivered around $43 billion worth of savings. We want to get spending back down to 30% of GDP, where it's broadly sat historically for New Zealand. It leapt up over 34% during the COVID era, and we think it's a much more sustainable position to get that back down. We've charted a path that gets us there, and we're confident that that surplus path is achievable with fiscal discipline.
New Zealand Finance Minister Nicola Willis speaking exclusively to Bloomberg. We'll have more ahead on the Asia trade. This is Bloomberg. We have some breaking data crossing the terminal from Japan. September producer prices are rising 2.7% on year. This is hotter than consensus and in line with what we got in the prior reading. In terms of the on-month reading, we're seeing it rise. Producer prices 0.3%. This is also hotter than consensus and versus a fall from the prior reading of about 0.2%. Now, we are, of course, keeping tabs on how this plays out on perhaps the pressure that the Bank of Japan is under based on the data to continue normalization, but also cognizant of what we're seeing domestically, politics-wise in Japan. Paul?
Well, let's check some of the stocks to watch when trade does open in Korea and Japan shortly. We'll be keeping an eye on shares of both Fast Retailing and Seven & i. Seven & i, after it cut its full-year operating income forecast, the owner of 7-Eleven convenience stores is reshaping itself under a new chief executive by selling weaker assets and buying back $13 billion worth of shares. Fast Retailing in focus too after reporting strong profit growth in the US, and that's despite the tariff volatility. Avril.
Yeah, for more on this, Fast Retailing's earnings, let's bring in Bloomberg Intelligence Senior Analyst Catherine Lim. So, Kat, we're seeing this really good numbers for Fast Retailing. This is fueled by Europe, North America business. That looks great. But the China side of the business, not so great. So is this sustainable?
Right. You know what? I guess something to bear in mind is that, firstly, China isn't broken for the company. It is just slowing down. And I think they've actually indicated that as we step into September, which is the first month month of their new fiscal year itself, they're starting to actually see some benefits of the restructuring that they've been doing in the market. So it does seem like, for this year, China is going to be better. But definitely, fast retailing is showing more balanced growth globally, which I think is a great thing. And in fact, this morning, as I was speaking to my editors in San Francisco, he's all excited because there's a huge flagship store that's actually opening downtown in San Francisco. And you can really feel the vibe for Uniqlo coming back in North America.
In terms of Uniqlo, overseas momentum, particularly in North America, is that going to be enough to offset the sales drag from China? And what are the longer-term implications for this global store footprint?
Right. Again, I think for China itself, they've indicated, and it is likely, that we're going to see the chain either stagnating or they are actually going to close down a few more stores this year on top of, what they are actually opening. So essentially itself, you're going to see the mix still shifting towards North America and Europe this year. But I think with the initial signs that we're seeing for China itself, I do think that China may not be as bad for fast retailing as we've actually seen in the last fiscal year.
What about what we're seeing in its Japan business?
Japan is great because, if you look at the numbers itself, they are actually selling more full-price items. The markdowns are coming down. They've really got their inventory and merchandise mix under control, which I think is a great thing. And I do think that, the profitability-wise, Japan is going to come through stronger this year.
On top of this, Catherine, talk to us about the numbers in what you're seeing in the potential for growth in this business.
Right. Well, again, it is fast fashion. Right? Let's not forget that at the back of my mind itself, we don't know whether Shein IPO and buying online is going to be the new wave of trend for 2026. So that would be something that personally I'm actually watching out for. Again, in the apparels at a very fast changing dynamics itself, you're looking at two firms, Fast Retailing and Shein. They've been known for doing great merchandising, great inventory control, being able to actually capture fashion trends really well. And the reality is that one stronger offline, one stronger online. So big question mark. You may have actually seen the news that Shein is actually opening their first physical store in France. I think that's actually going to be due to open.
And we'll watch how fast retailing fares at the start of trade in the next hour. Thank you so much, Catherine Lim from Bloomberg Intelligence. Keep it here with us. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And Paul, it's really about whether this AI theme continues at the end of the trading week. Don't forget how Wall Street performed, but also we have South Korean markets coming back online. And as some of our colleagues highlighted earlier, traders are really chomping at the bit to get back into this AI game.
Yeah, absolutely. A 2-day break for Korean stocks, so it'll be interesting to see how the catch-up trade plays out there, particularly with those chip makers, as you mentioned. And not a great lead-in from the US, however. We did have some modest declines there. And, as you point out, these questions starting to circulate about the sustainability of the whole AI rally.
So let's take a look at how we're faring in Japan first. Of course, we've been seeing that climb fueled by some of these semiconductor-related names. SoftBank was an outperformer just a day ago. For the moment, perhaps trending in line with how Wall Street performed overnight. Again, those bubble concerns. And we are seeing the Nikkei looking a bit soft, as is the broad gauge, the topics. Now, this is also against the backdrop of that focus on dollar-yen yen. We did hear from the incoming Japanese leader, Takaichi, and saying there's no intention to spur further yen weakness, but that hasn't really helped to pull the yen back from the brink against the greenback. We're still hovering at that 153 level. Of course, we did see the bounce in the dollar overnight, that strength picking up to around 2-month highs, still holding at around 1.7 on the yield on the 10-year. Take a look at how South Korea is faring in the early goings as we watch to see whether some of these chip names pull ahead. Of course, the focus is on the likes of Samsung Electronics. Already in the pre-market, we saw those strong indications versus how the ETFs were faring in the broader market. So we are seeing that gain in the Kospi for the moment. Kosdaq also sitting quite positive. Again, that dollar coming back, that seems to be putting that pressure on the Korean won as well, Paul.
Yeah, well, let's take a look at how US futures are tracking. Meanwhile, it wasn't a great session today. We did see a modest pullback, but we got E-mini futures better by 0.1% at the moment. S&P still up about 36% from that April meltdown that we saw. If we take a look at the yield on the 10-year, also not a lot of change there. We did hear from a couple of Fed speakers as well. John Williams saying he supports more rate cuts this year due to his concerns around the labour market. Michael Barr, however, calling for a more cautious approach to easing due to tariff-inspired inflation risk. Of course, data in short supply around the US at the moment due to the ongoing shutdown. A quick word on the oil price as well. That's recovering a little bit, but still a little bit softer from where it was before the announcement of a tentative ceasefire agreement between Israel and Hamas. And there is an expectation, a hope perhaps, that maybe there'll be some hostage exchanges early next week, either Monday or Tuesday, and President Trump saying that he would travel to Israel to be there for that, should it happen. All right, let's get to Chris Rossbach now, CIO at J. Stern, for his thoughts on what we're seeing in markets at the moment. And Chris, I do want to start off on that modest pullback that we saw in the US. Seems like we've seen this before, really, haven't we? A little bit of concern, some questions being asked over the sustainability of the AI rally. How much further do you feel this has got to run, or is it starting to have shades of 1990s and .com to you?
I think the overall demand for computing capacity is massive, and we're only at the very beginning of realizing the potential. So we see that the big players, the hyperscalers and others, are already generating cash returns from the investments that they're making, if you just see what Meta's been doing. So the underlying demand is absolutely real, but it's about the fundamentals and it's about the valuation. A lot of the stocks in the US, including some of the large ones, are very overvalued. So that is an issue, but others like NVIDIA are not. They're generating a lot of cash, and so they're still at very reasonable valuations for the growth that we're expecting them to be able to achieve.
And how about valuations in this space in Asian markets? What are you seeing there?
I think there as well, we've seen that there's a lag. The stocks that are in bubble territory are a significant issue, and I think it's very important to be selective. But if you see the amount of capex that's going in by the hyperscalers, the demand for GPUs, and the need for increasing capacity of producing them, then I think there's a lot of reason for optimism.
Christopher, how else are you determining whether some of these stocks are overvalued? What are the metrics that you're using?
Well, I think it's about the fundamentals, because it's about the addressable market, it's about the market shares, the sustainability of what they're able to achieve, and then it's about the present value of these cash flows. It's a basic fundamental investing, which I think is really important in an environment in which markets in aggregate are more fully priced, in which some stocks are overpriced, but others are at very reasonable valuations. So I think if you look at just the price to earnings multiples, for example, that NVIDIA is trading on in the 28 to 30 range, then for the growth that they're able to achieve, that's very reasonable. But if you do the analysis, and then I think you can see that the present value of these stocks is still very much higher than where they're trading.
Chris, out of the markets in Asia that you like, are there specific ones that you are more focused on? I mean, we've seen South Korea come back from a long holiday. They're playing catch up. Samsung Electronics is jumping 6%. This is trading above the record high closing level. I mean, do you have specific preferences when it comes to Asia stocks?
Well, I think we look at global stocks, and so it's one about where companies are listed, but also where about they're doing business. And in a world that is more global, I think people have to have that kind of perspective. I think there's a lot going on in Japan that I think is very exciting in terms of the recovery from the pandemic, in terms of where we are in a completely different economic environment. So we see opportunities there, but we are also looking carefully at other markets, including Korea. The issue with Samsung and other of the semiconductor equipment makers is that it's such a capital-intensive industry, and it's also cyclical. We think that the underlying demand for the very high-performance GPUs is very strong. The demand for the more commodified GPUs is much more cyclical. So I think that is going to put a lid on where valuations for those kinds of stocks can go.
Just in terms of risk, and this has been knocked off the front pages a little bit by other events this week, but of course the US is still in the grip of a federal government shutdown. How long do you see that lasting, and how's that informing your strategy at the moment?
I think we're in the middle of very significant political uncertainty that really comes from the pandemic. It comes from the inflation and the interest shock that we're seeing. And I think we're seeing it reverberating really across countries. It's happening in the US, it's happening in Europe, it's certainly happening in Japan and in other Asian countries. So it's very significant, but we're also at a period where there's a lot of economic strength, where labor markets are generally good and where incomes are rising. So I think if we look forward and we get through some of these disruptions, the picture should be much more positive. The government shutdown in the U.S. is part of that political uncertainty. It is affecting things, but at the same time, it might have an impact on U.S. output. But on the other hand, it may help to put a damper on inflation, which is an issue. The underlying picture in the U.S. is very strong, and I expect it to be resolved at some point because the guardrails are still in place, and the overall incentive is to keep the economy moving. So I expect there to be compromise in the near future.
Well, in the meantime, in this climate of uncertainty, we've seen gold push above 4,000 an ounce. It's back below that now. But do you think this is the end of gold's story yet, or do you see this rally continuing?
Well, gold is a store of value, and I think there's a lot of dynamics going on. It is in part the sovereign demand for gold, with countries building up their reserves in a world where they do want to diversify from the dollar. So that is part of the explanation. Part of it is the uncertainty that people have in terms of how to protect their assets in an inflationary environment. So it's about supply and demand. It's really at record highs. There are some arguments that say it could go as high as 8,000. Others say that the production cost of gold isn't significantly higher, and so eventually it should head down there. I think it has a role to play. I think it has moved a lot. And the really important thing is that gold doesn't grow, it doesn't compound, it's just a supply and demand issue, whereas investing in great companies that can in fact grow, that can generate compound returns, as we've seen in markets, as we're seeing in markets this year despite all the uncertainty, means that for long-term investing, stocks are the answer. And I think gold is certainly at a moment where the highs have really been reached.
You're alluding to some of this as well. I mean, some of the tailwinds for gold include the so-called debasement trade. What are you seeing in the interplay of havens traditionally in the markets?
Well, people are looking for safe havens in times of uncertainty. There's the whole argument about the de-dollarization, that the privilege of the U.S. as the world's reserve currency is changing. That would be a multi-decade issue, really, since the gold standard was removed in the 70s in terms of the global economic paradigm. I think that the rumors of the death of the dollar are greatly exaggerated because the question is, what's the alternative? The U.S. is still the world's largest economy, the most dynamic with the highest growth. There are a lot of issues in Europe. We're really just one election away in France or other countries from having very significant issues there. And if you look at global trade, if you look at the makeup of where growth and where productivity happens, I think it's hard to see whether some of the alternatives, like some of the other large global nations, like stablecoin, or other kind of ideas, will actually replace the dollar. I think we need to get through this moment of great political uncertainty, but I think the dollar will continue as the reserve currency. And so I think the weakness that we're seeing across the board is a reflection of that, that I think will reverse as it has in the past.
Chris, great to chat. Thank you so much. Chris Rossbach, a CIO at J-Stern. Now let's take a look at some of the stocks that are in focus today. Of course, we have Japan's corporate earnings season underway. So take a look at the likes of fast retailing that is jumping almost 6%, as much as 5.8%, actually gone past that, 6% higher now, to the most since at least July 2020. This is the most that has jumped since July 23rd. Of course, this is following on from the numbers, operating income forecasts that beat estimates. We're seeing strong U.S. as well as Europe growth, and this is despite tariffs. We heard from our Bloomberg intelligence colleagues earlier saying, yeah, the China numbers weren't great, but that's not yet necessarily a cause for concern. Take a look at 7&I as well, that cut its operating income forecast for the full year. So this was a miss, cutting the profit outlook. And of course, this is coming at a time when it's trying to reassure investors that it can thrive without a foreign takeover. We are seeing 7&I down about 1%. Paul?
Yeah, let's take a look at how we're tracking in Korea as well. The Kospi trading again after a couple of days off for a public holiday. The broader index better by 0.75%, but it's really IT stocks that are flattering this. A lot of the sectors on the Kospi are actually weaker, but information technology as a sector up by more than 4.5%. And it's those heavyweights, Samsung Electronics, SK Hynix performing particularly well. Samsung better by 4.25%. SK Hynix up by 6.7%. now. So the tech story alive and well in Korea at the moment. So we have more ahead on the Asia trade. This is Bloomberg.
Of course, we've been tracking developments on the implementation of this peace plan between Israel and Hamas that, of course, the U.S. president has brokered, and we are looking at the next steps. Of course, one of the big things is how the Prime Minister's office in Israel has said that the Israeli cabinet has voted to approve the deal. In the meantime, the U.S. president saying he'll travel to Israel for the release of hostages under the terms of a deal ending the war with Hamas, and this agreement calls for the return of all remaining hostages held in Gaza in exchange for Israel's release of nearly 2,000 Palestinian prisoners.
Peace in the Middle East. We secured the release of all of the remaining hostages, and they should be released on Monday or Tuesday. Getting them is a complicated process. I'd rather not tell you what they have to do to get them. There are places you don't want to be, but we are getting the hostages back on Tuesday, Monday or Tuesday, and that'll be a day of joy. I'm going to try and make a trip over. We're going to try and get over there.
Bloomberg managing editor Jill Deeses joins us now for more on this. So, Jill, there's a lot of enthusiasm that finally we are making headway. Trump set to visit Gaza, but we want to know about what the next steps are. The Israeli cabinet has approved the deal. I mean, what are you seeing?
Yes, that's right, Avril. So at this point, obviously, you're seeing quite a lot of optimism over this. Obviously, many challenges are going to remain as to how long this may actually continue. But at this point, you just heard from the President of the United States saying that he intends ideally to travel to the region in order to oversee the exchange of these hostages. So what we know is there are, of the 48 hostages that Hamas has, maybe 20 or so are alive. The intention is to return all hostages, alive or dead, in exchange for the release of those prisoners. But, after this, Avril, I think the really important key thing to keep in mind is where exactly do we go from here? There's a lot of concerns over, other parts of this deal that are still being negotiated or that have been sort of in some agreed to, the idea of decommissioning weapons, the idea of bringing in UN aid to the Gaza Strip. All of this is stuff that's currently sort of being, in the works. But again, I think, we're still within the first, 24, 48 hours of this ultimately being announced. We'll have to see where we go from here.
In the meantime, Jill, we've got the United Nations saying that it's ready to go in terms of rolling out relief. Obviously, that's going to be a big job. Can you give us a sense of the devastation, what's needed, and this idea that perhaps having a flood of aid workers in the region might help this ceasefire to stick?
Yes, Paul. I mean, look, we're talking about a region that, was in crisis long before this war broke out 2 years ago, but which has obviously been incredibly devastated by the extent of the warfare over the last couple of years. So what we've really seen from the UN, they're prepared to, as they say, immediately support several humanitarian efforts into Gaza to try to make, try to make this happen. They're ultimately looking at, supplying to the people of Gaza anything that they might need in the next 60 days, from delivering food and medicine, providing shelter and clean water, establishing learning centers for children who haven't been able to go to school properly for, again, remember, the last 2 years. That's how long this latest conflict has really been going on. So we are seeing that intention by the United Nations in order to get that aid into Gaza as soon as possible. I think that's also just really kind of underscores how critical it is to make something happen in the really, really immediate future, and then to ultimately, sort of broker something that leads to something that feels like peace that's longer lasting than just sort of the immediate term.
We're watching also some of the other world leaders. Of course, there's so much attention on the Middle East, hearing that Putin is actually postponing this Russia-Arab summit.
Yes, that's right. And so ultimately, the reason that we've really received from the Kremlin as to why the summit is postponed does have to do with this peace deal with Gaza, that there's a lot of Arab leaders that would need to be involved sort of as we work through the coming days. So potentially that's something that you see, after the fact there. But I do think that it's significant that obviously you're putting on hold some of these potential other bilaterals and summits in order to sort of bring everything to this region now, sort of to crucially get the initial stages of this peace deal over the line.
Jill, thank you so
Bloomberg.
much. Jill Deesis for us there. And of course, we're also hearing in the meantime how Russia attacked energy infrastructure in Kyiv. And this is according to local administration. So certainly Russia ramping up the pressure on Ukraine at the moment, Paul.
All right, thanks very much, Avril. Just want to take a look at how New Zealand assets are tracking at the moment. We've got the Kiwi dollar, seems a little changed against the greenback at the moment. Also against the Aussie, that pair now stuck at 114.09. And some analysis on the Bloomberg Markets Live blog suggests maybe that repricing in terms of the RBNZ's dovish stance, especially as it relates to how the RBA's been performing, might be behind us. The broader index at the moment off by about 2/3 of 1%. We're also looking at shares in Chorus, which is a telecommunications infrastructure company that the government has a debt stake in, which it may be looking to sell. We heard that from New Zealand's Finance Minister Nicola Willis a little bit earlier on. The Finance Minister also saying she expects the country to return to growth in the third quarter with further acceleration in 2026. We spoke exclusively to Nicola Willis and asked her why the economy's been so fragile with a bigger than expected contraction in the second quarter.
Look, we know with the seasonal variation since COVID that those numbers have been jumping up around, and there could be some correction to that figure at a later update, particularly given some of the technical factors in that measure. But we were expecting a negative second quarter, and what we saw is after 6 months of strong growth and recovery prior to that, including a 0.9% positive rate in the first quarter of the year, that on the 1st of April, when the Trump tariff announcement occurred, that really knocked confidence out of a lot of New Zealand businesses and investors who looked at that global uncertainty, and for a global trading nation, really worried about where that would go. We're now in a much more settled environment. We know what New Zealand's tariffs are, and we've watched our exporters adjust very quickly to that new reality. And many of the worst side scenarios that had been predicted haven't occurred. And so we're confidently predicting that growth will have returned in the third quarter and should accelerate in the fourth quarter, particularly helped along with an official cash rate that continues to fall.
Yeah, I do want to, you mentioned business confidence there, and the latest business confidence report showed firms planning to reduce investment. How much of a concern is that for you?
Well, we've worked as a government in this year's budget to provide more impetus for business investment through the Investment Boost tax policy, which offers a 20% write-down on asset investments against tax bills. And that's directly intended to be a tax incentive to encourage investment. And firms have certainly said that that is something that will make some business cases stack up that wouldn't otherwise. And as we look ahead with a lower official cash rate, with inflation now having stabilised back in band, and a government that is ultimately pro-business, reforming, deregulating, we believe that's creating the conditions in which businesses will feel more confidence over the coming months.
All right, so you're expressing some optimism, but of course we had the RBNZ, the Reserve Bank, cutting rates by 50 basis points last week, saying it's open also to further reductions. Does that suggest to you the central bank doesn't share your optimism, that it's worried the economy won't recover?
Well, I think that was the Reserve Bank doing its job of reacting to data in the second quarter that, as you pointed out, was much more negative than had been forecast and quite different from what they had forecast and what had informed their earlier monetary policy path. So the bank is reacting accordingly, and of course with that lower official cash rate, that in itself will be an inject for the economy, and that's, in my mind, monetary policy doing its job. As a government, we're working alongside the Reserve Bank by ensuring that our fiscal settings give them that room to move on interest rates, by ensuring that we're not overstimulating the economy and that we have a path of fiscal consolidation.
New Zealand Finance Minister Nicola Willis speaking exclusively to Bloomberg. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at how Asia chip stocks are faring. Of course, we are seeing that as the major boost to the Korean benchmark today. Samsung Electronics, SK Hynix certainly playing catch up to the AI play that has been wavering a little as South Korean markets were shut for much of this week. And of course, we are seeing a bit of pressure coming onto the Japanese names, the likes of Tokyo Electron, Advantis. Now, it was also really interesting to see how, despite TSMC's sales numbers looking really good, that its ADRs came under pressure. So we'll see how the Taiwan markets fare when they come back to trade. Paul?
Let's take a look at how European futures are tracking. Meanwhile, it's been a rough couple of days for European car makers. We've had warnings on profitability for luxury brands Ferrari, Porsche and BMW as well. We need to talk about France also. The President Emmanuel Macron saying he's expecting to name a new Prime Minister before the weekend. The Socialist Party's demanding a leftist premier would potentially see reversals of a lot of his agenda, including pension reform and the lifting of the retirement age. Also, the outgoing French Prime Minister emphasises that most people in Parliament would rather avoid fresh elections. More ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade, and we continue tracking developments in tech firms. Microsoft says its data center crunch will continue for longer than previously outlined, underscoring the software giant's struggles to keep up with cloud demand. Let's bring in our US tech editor, Andrew Pollack, for the latest. So, Andrew, this forecast that the data center crunch is going to last longer than previously anticipated, how big of a problem is this going to be for its growth engine, Azure?
Well, it shows that they have more demand than they have capacity for. And so this has been an issue for about the last 6 quarters. So the question is how long it will continue and whether it means they're going to lose business because of it. I mean, Microsoft's been pretty confident that they could get up to capacity by the end of this year, but we've found out that it's going to extend for at least another 6 months. And this is a big business for them, as you point out. It's a $75 billion a year cloud business. But because of the demand, not just for AI workloads, but for what we would consider traditional cloud workloads, Microsoft just can't build data centers fast enough to keep up with what their customers need.
We've also heard that Intel is debuting some new technology. Can you tell us a little bit more about what's been unveiled and how important this is for Intel to remain competitive?
Well, many people think this is a pivotal moment for Intel. They used to be the technology leader in chips, and obviously they're not anymore. This latest production capability, they think, makes their chips more efficient, and those chips will use less power. So they still have to demonstrate that. These are chips for PCs and servers. They still have a great deal of the server market, but they've been losing market share. And this is a very important time for them to show that they can, once again regain their technological advantage that they've had in the past.
All right, Bloomberg's tech editor Andrew Pollock there. Let's take a look at how commodities are tracking, in particular oil and gold. I want to start with gold. It's just creeping back up towards that $4,000 an ounce level. We saw it dip below that, of course, really on relief that the conflict in Gaza appears to have ended. There are still a lot of hurdles to clear yet, but certainly some very encouraging news there. But gold now recovering a little bit on the no shortage of plenty of other political uncertainty around at the moment as well. We've got crude oil also recovering. We've got Brent now up 0.1%. We're still below where we were before the announcements of yesterday's tentative ceasefire. The Gazprom CEO is also saying that long-term forecasts are pointing to a cold winter in Europe and Russia, seeing increased gas demand, and just in the last little while, news that Russia has attacked energy infrastructure in Kyiv. That's according to local administrators. So for more on oil and the energy outlook, let's get to Sara Vakhshouri. She's president at SVB Energy International. Sara, thanks so much for joining us today. I just want to get your view on how this lowering of geopolitical tension, at least in the Middle East anyway, is going to impact the oil price going forward. Have we seen the floor yet?
Well, obviously, yes. Yesterday, we have seen that price adjusting itself a little bit after the news of ceasefire between Israel and Gaza. So definitely some of that priced-in risk that was accepted, included in the price, have been released, and we can see the prices adjusting themselves a bit. Definitely the market could expect that this could have impact on, let's say, for instance, on Houthi threats on the Red Sea, or would that potentially have an impact on Iran deal? However, at the same time, as we see OPEC Plus is increasing the production, we're having that cushion and spare capacity that the market would again price in at the time of geopolitical risks is deflating. So while we are having this risk premium reduced because of the new positive news coming out from Middle East, however, we still have spare capacity crunching, shrinking, and definitely if there is going to be any severe geopolitical factor in the market, this time the market is going to see a higher risk because of a lower spare capacity.
Yeah, to your point, this remains very much a supply-side story, and I just wonder how much more supply you see OPEC Plus bringing on in its coming meetings, and what are the chances of an oil glut in 2026?
Well, the glut would happen, obviously, if the OPEC would release significant amount of OPEC Plus would release significant amount of oil in the market. However, they have been extremely cautious. And there are so many evidence of that. We can go as far back as COVID, and even in the recent increase that we see, it was much lower than many were expected in the market, and they were waiting. Very different from previous month, which shows that OPEC is very cautious of how much oil is bringing in the market. And at every statement, OPEC has all the time reiterate the fact that if there is any changes in the supply, they would definitely reverse the decision. So again, while people expecting the trend would be that OPEC would continue releasing and increasing the production, unwinding those voluntary cuts that at the time were done for the COVID time, now they're bringing it back, but they're bringing it back very cautiously and very much adjusted by the market. And again, for instance, now the seasonal demand is obviously lower than previous months. So we see that how cautiously OPEC increased the production. The other factor we have to consider is that some of these increase that we see on the paper might not materialize realistically. For instance, Russia, even though Russia is trying to increase its production, still is underperformed.
Yeah, constraints to actually ramping up production from some of these OPEC plus players. But Sara, I wanted to get your thoughts on what this latest geopolitical development in Gaza and those concerns lingering still about Russia and Ukraine tell us about the energy security backdrop at the time when this lid on oil prices is also helping to cap the inflationary aspect, which we might not have seen the worst of given the tariff impact.
Very well. You put it very well, because this is very important. Again, the geopolitical factor is important. Any good news is good for global economy, for in terms of oil prices, to the tension and the risk factor to adjust itself, and the reduction, the threat on the physical in the infrastructure, that all could be relieved. However, still, the prospect of peace agreement between Ukraine and Russia is not clear. Potential additional sanctions, which could appear as a tariffs, U.S. sanctions, let's say, on India, still unclear. But at the same time, also looking at the demand, we are seeing that China, that, again, the market, particularly last year, they were expecting that is not going to have a demand performed as strong as expected. We see that just news that they're expanding their storage sites, which means they're going to continue stockpiling oil this year and also next year. But going through energy security overall, when we're talking about oil prices, we're usually looking short term, even the geopolitical factors. We look at it every quarter or seasonal, but looking at it as as an energy security in the long term, definitely, there are a lot more factors like security of minerals. But what is more eminent, and we are challenging, I'm talking to you from Washington, D.C., our neighboring state, Virginia, is electricity demand. And we're already seeing electricity outages there. And the situation is really... I would say the state of crisis is already happening, because even, let's say, a small restaurant like a Chick-fil-A cannot get a new restaurant open because there is no additional electricity supply for even in a small business to open, because all these data centers, the ones that are already under contract, not any new ones coming in yet, are challenged with electricity. So I would say if we expand the horizon of the time talking about energy security, we are way beyond oil, and even though we are already dealing with electricity demand and critical minerals.
Sara, I wondered also, you talked about China right there. How do you think, as an importer of Iranian and Russian crude, it is viewing these latest developments?
On Iran, again, I would say the point on Iranian oil and the sanctions, the current sanctions, as extreme as can go, the thing is that Iranians have kind of moved beyond using anything that could be easily sanctionable. They are not using really the trade financial system. They're mostly relying on their own dark fleet. So thinking that sanctions only would reduce their current volumes of export, it's not really imaginable unless there is, let's say, an actual patrol going on and stop those ship-to-ship logistics on the water, or some of those storages that are happening in certain countries. But the biggest factor that could potentially and quickly reduce Iranian export would be the will of China. If China decides to reduce that imports. And that is what happened during the first term of President Trump, that China decided, due to the trade negotiations that had with the United States, to voluntarily stop and reduce significantly its purchase of Iranian oil. If China decides to do that, yes, we can see a significant decrease of current Iranian export. However, with current sanctions, if there is no actual physical interruption of Iranian exports, we cannot foresee any additional reduction.
Sara, really good to get your insights. Thank you so much. Sara Vakhshouri is president at SVB Energy International. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at how Asia stocks are faring. Of course, this is following on from that poor handover from Wall Street overnight and the pullback in U.S. stocks. The question mark still about whether we are in a bit of a bubble when it comes to the AI rally. We have been seeing this surge from April lows, of course, and take a look at Asia stock benchmarks. We have been seeing them actually treading water, but the South Korean benchmark, after a long holiday, is back and playing catch up. This is getting the boost from the chip-related stocks, particularly SK Hynix and Samsung Electronics, Paul.
All right, so let's get to Hong Kong now for a preview of the Friday trading session with our China correspondent, Min Low. So, Min, what are you watching today?
Hey, Paul. Yes, as Avril mentioned earlier, we have a bit of a weaker handover from Wall Street, right? You look at overnight, the Golden Dragon, a pullback of about 2%. The Crane shares as well, 2.2% lower. So that doesn't really bode well for the China Open later today. But we're in particular watching very closely the chip stocks in China, because a very fascinating thing happened yesterday. If you flip the board, take a look at the big sell-off that we saw yesterday on SMIC and Hua Hong, down by about 6.7% here. A very unusual move, because we saw huge volumes yesterday in the afternoon session, 3 or 4 times the trading volumes of the usual volumes. And it looks like there is some rumors spreading online, and a big caveat here that we can't verify those rumors, but it seems like there is concern from brokers that SMIC perhaps can no longer be used as a collateral for margin trading. There's concern that the price to earnings ratio maybe has already gone up too much. So that's what we are seeing online. Again, we can't verify that, but it appears to be something that is moving markets based on the unusual volumes that we saw yesterday. So something to keep an eye on today. I also want to point out, bear in mind though, even with the big sell-off, we have seen such a huge gain in these two stocks this year. SMIC was up about 100 over percent, Hua Hong up nearly 300%. So the sell-off yesterday is still just a drop in the bucket. So why not take some profits, right? We're also keeping an eye on the yuan as well. And we flip the board, take a look at the yuan. Yesterday we came back from Golden Week and we had a stronger than expected fix from the PBOC. So we saw the yuan holding on to the gains for the first time in about 6 days. And something to keep an eye on as well, because some analysts from BNP Paribas, for example, is expecting that maybe we could see a mini rate cut and stimulus boost from the Chinese government in the fourth quarter as the government tries to push the economy to make sure it's on track for the 5 5% growth target at the end of this year.
Min, thank you so much. Bloomberg's China correspondent Min Lo for us. Now on to some other top global headlines we're following. The U.S. has launched a bailout for Argentina, offering $20 billion in financing and carrying out a rare intervention to prop up the peso. Treasury Secretary Scott Bessent announced the currency swap and government purchases in a social media post. The peso swung from steep losses to a gain. Trump's support for ally Javier Milei comes ahead of this month's midterm elections in Argentina. President Trump is doubling down on his threats of sweeping cuts to democratic priorities as the U.S. government shutdown continues. Speaking at a cabinet meeting, Trump repeated his warning of cutbacks while blaming Democrats for the shutdown. Government workers and military personnel are bracing for missed paychecks. Trump says he's been speaking with Democrats but didn't give any names. A grand jury has indicted New York Attorney General Letitia James over fraud claims after calls from President Trump for her prosecution. Court filings show she was charged with bank fraud and making false statements to financial institutions. In a statement, James calls the charges baseless and a weaponization of the justice system by the president. We'll have more ahead on the Asia trade. This is Bloomberg.
The top corporate stories that we're tracking. Amazon is rolling out an updated version of its main artificial intelligence tool for business. It says QuickSuite is a chatbot and set of AI agents that can analyze sales data, produce reports, or summarize web content. It's the company's latest effort to grab a slice of the market for software designed to automate and speed up office work. Court documents show a joint venture between Japan's Norinchukin bank and trading house Mitsui faces a $1.75 billion worth of exposure to bankrupt auto parts supplier First Brands. Norinchukin told Bloomberg News that it's discussing appropriate responses with JA Mitsui Leasing. The claim from the venture, Katsumi Global, is the largest disclosed so far after First Brands filed for Chapter 11 last month. Ferrari shares plunged the most since listing in 2016 after it issued cautious forecasts. The Italian car maker sees adjusted earnings rising to $4.2 billion by 2030, but that's a slower growth rate than previously offered. Ferrari's also scaled back its electric vehicle plans, even as it unveiled elements of its first EV, the Electrica, which is set to debut next year. And the gloom is worsening for Germany's auto industry, with Porsche now joining BMW and Mercedes-Benz in reporting weaker sales in China. Porsche's revenue there fell 21% during the third quarter, dragging global shipments down by almost 6%. German Chancellor Friedrich Merz has now announced $3.5 billion in new EV aid for the industry, while saying he'll push back against EU plans to effectively ban new combustion engine cars by 2035. Avril.
Yeah, Paul, you mentioned there the importance of the Chinese market for these European automakers. Speaking of, the NBA is preparing for its return to China with pre-season games in gambling hub Macau. 6 years after a fallout over protests in Hong Kong put the relationship on ice. The Brooklyn Nets will play the Phoenix Suns this weekend, and Bloomberg's Adrian Wong joins us now. Adrian, tell us why this is such a big deal.
Well, it's a big deal because China for the NBA is actually a $5 billion business. So it's definitely the largest and most important market for the NBA outside of the US. Now, basketball is actually perhaps the most popular sport in China. According to a report by S&P Global, actually over half of Chinese internet users actually watch the NBA. And just to give a little bit of context of why this relationship soured to begin with, is that because back in 2019, 2019, the general manager for the Houston Rockets at the time, he posted a tweet in support of the pro-democracy protesters in Hong Kong. And as you can imagine, the backlash was pretty major. We saw sponsors cutting ties. We saw state television, CCTV, stopping the broadcast of the games, and even Tencent even stopped the live streams. And so there was so much at stake at the moment. And I was actually in Shanghai in 2019, and I even saw like banners of NBA being pulled down from the buildings. And so Adam Silver, the NBA commissioner, he actually said because of all of this, quote, hundreds of millions of dollars were actually lost because of this. And so when I was speaking with Mark Dreyer, who's an expert in the Chinese sports industry, he was saying that essentially the NBA had to return to China because the Chinese market was simply too big to ignore.
So, Adrian, what's the NBA been doing? How's it trying to rebuild its brand in China?
Right, so there's been a lot of behind-the-scenes talks just over the years trying to mend that relationship. And it's actually interesting that it's being played in Macau because usually these games are played in the big cities such as Beijing and Shanghai. And experts that I've been talking to, they're essentially saying that Macau was really seen as like a testing ground before it really fully returns back to the mainland. And it was essentially a safe choice for the NBA to play the games over there. And they've signed quite a big deal with Sands China, who is doing the games. And CCTV, they've actually eventually resumed playing the games on TV about 2.5 years after the initial fallout. And just from the NBA side, they've sent the likes of LeBron James and Steph Curry, as you can see there, going back to China, which drew thousands of fans, really. And even when Curry was in Chongqing, he was welcomed with such a extravagant drone show. But even on the flip side, Anta Sports, they have the largest sportswear company in China. They've even signed the likes of Kyrie Irving for some deals. So it's a two-way street here.
All right, Bloomberg's Adrian Wong there on the NBA's return to China. Speaking of China, markets, of course, going to be opening at the bottom of the next hour. So let's take a look at how futures are tracking at the moment. A little bit softer at the moment, and battery stocks could fall as well on the news that China may impose export controls on some lithium batteries, critical minerals and related technology from November the 8th. But that is it from the Asia Trade. Markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China Show next. This is Bloomberg.